Good morning, everybody. It's Monday, November 25th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had December corn down 2 3/4 at 422 3/4. January soybeans were up 5 at 988 1/2, and December Chicago wheat was down 9 1/2 at 534 3/4. This morning, we had a fairly large export sales announcement for corn, a total of 454,090 metric tons of corn to Mexico. 364,792 of that was for 24, with the balance coming for 25. Good morning, guys. Hope everybody had a nice weekend. Kind of an interesting week. We'll pause for Thanksgiving here towards the end of the week, have reduced trading hours there on Friday. But we've got first notice day coming up. We've got a pick for Ag Secretary, Brooke Rollins. So a lot going on here. Dustin, maybe a few thoughts as we kick off the week, and then we'll throw it around the room.
Yeah, it's kind of a weird trade overnight. We had wheat leading the way lower, and corn following suit, and beans finding some strength potentially on the weaker U.S. dollar index. The dollar is coming off of Friday's new high for the move, and it's starting off the week lower. Maybe just some de-escalation, risk off. We're seeing, risk off in other commodities like energies as well today. Shortened holiday week. I can't really explain the move necessarily overnight, but I do know that the beans corn ratio has dropped quite a bit in the last couple of weeks. Beans have been led lower by, the funds kind of staying short beans, not really covering that side of their short position, but they've been aggressively covering their corn shorts, and those that are left long have put them net long corn. So as we stand right now, they're slightly net long corn, short beans, and it looks to be in the front end of the market at a very low ratio. So perhaps it's just some profit taking on that position, or just position reducing. But otherwise, still kind of all eyes on geopolitical tensions for direction right now.
Very good. Ben, what's on your mind as we start the week?
Holiday week, when we have first notice day on Friday, I still believe that there's a lot of basis contracts that are out there that have to be addressed. Typically, that would start from different commercials today through Thursday, tomorrow through Thursday. Depending on what date they force you out. We lose Thursday because of the holiday, and then we're right into first notice day. So I would think that there would be some of that volume condensed in a little shorter time frame. In general, when you get into holiday markets, you can get a little lighter participation. The old axiom is you don't make your year in December, don't lose it, right? So wouldn't be surprised to see kind of after this, maybe a little bit more stagnant markets. I don't think volatility will come off much in December, even though I don't see a lot of reasons that we would move violently. So you take it a day at a time in this period. This is where the rubber hits the road for unpriced contracts, and we'll see how the market digests it. We're sitting up against some pretty big technical numbers, particularly in March corn. We are below the 20 and below the 50-day moving average this morning. And those are typically areas where you might see some acceleration of momentum, trend type traders to enter or to exit positions. And then a nickel below that, you have the 100-day moving average. So some stuff there. There's some powder, I think, in the ammunition here for the next few days to see who wants to stay, who doesn't. We think spreads are still too tight. So it could be a fun week, actually.
Justin, it was an interesting pick over the weekend to see Brooke Rollins selected for Secretary of Ag. I mean, she was a White House aide in the first Trump administration. There's a lot of stories out that, some minor infighting amongst his group of who to pick, kind of bucking the trend of going directly to ag. So it'll be interesting to see what this, if this falls in line with how he's shaping the rest of his cabinet.
Yeah, no doubt. And I think there's, the markets are trying to figure all that kind of stuff out. So as far as we're concerned, I don't know how you try to trade around it. You know, there's going to be ideas of, you know, biofuel policies or, you know, all those kinds of things. And I think it's probably a waste of time to get too excited one way or the other. You know, at the end of the day, Trump's a pretty big supporter of farmers. So, I find it hard to believe that they would do anything that would, severely negatively impact that sector. So I'm not too concerned about it. I think the biggest one's going to be, China and US, and how that whole, trade war or, plays out.
Yeah. No,
So.
yeah, no doubt. Guys, anything else on the grain side that we want to address here this morning? Like I said, it's going to kind of be an interesting abbreviated week. One thing we did note, Dustin, with Friday being first notice day and no trade Thursday, some of those decisions will have to be made on Wednesday. Relative to your position. So
yeah, so anything that's long a December CBOT contract, like December corn, December wheat, if you go into it long on Friday, you technically risk delivery. And so you need to be out by Wednesday's close to avoid delivery. Same thing on the short side. You don't risk delivery, but you also are, if you're not intending to deliver it, you can get really tripped up in the delivery process. So everything really in December should be covered by Wednesday and rolled out to the next month or exited if you're in December futures to avoid the delivery process. So yeah, Thursday, it's just a unique year for Thanksgiving to be at the very, very end of the month. Normally it's option expiration we're working around. D's March is still quite narrow in corn. River levels have recouped, and demand, obviously we're still looking at 500,000 metric ton sales to Mexico again this morning, just in a daily announcement. So we still have incredible demand. That explains why the spreads have narrowed up so much for corn. And I would just make sure you're covered on that risk before delivery comes.
all right, very good. Ryland, mostly neutral cattle on feed, but like we were kind of talking about this last week, higher than expected placements. So what are your thoughts on the report and I guess all things cattle as we start the week?
Yeah, the report itself, I don't think offered too many surprises. I mean, for the most part, we were expecting kind of a bigger placement number, and we got it. It was slightly above expectations. So typically you see like a little bit of a weaker open on those kind of numbers, but generally speaking, the market was ready for this kind of supply report. So I think the focus this week is probably just going to be about how cash is shaping up. Cash was actually a little bit better than expected last week as well. So as they call it, the cattle on fade report, we could probably see guys try to buy it if we do see any kind of significant downturn for those that were kind of leaning heavily into the report. So we'll see how it shapes up. I think overall just kind of neutral there, but cash is good. And the beef, I think, is still kind of the big X factor here going into this week. We had a bigger than expected kill, so I think that's maybe a little bit better support than we thought we were going to see. So we'll just see how it shapes up. I feel like we're just going to trade kind of on the neutral side this week. On the hog side of things, we saw a big up last week. Overall, we did see bellies and cutout really start to kind of weaken up, but the trade still wants to kind of push the long side of the market. So I think just overall, once again, it's just a good opportunity kind of leading into this week, and we'll see kind of how it all shapes up.
Oh, very good. And interestingly enough, breaking news here was just sent this that APHIS just announced, I guess it looks like November 22nd, there was positive detection of NWS in Mexico. So as a result of that, they're looking at restricting the import of animal commodities originating from or transiting Mexico effective immediately, pending further information from Mexican veterinarian authorities. So obviously more to develop on this story, but what could that possibly mean for us here, Ryland?
Well, I think and that's kind of what the fear has been, I think, of the feeders, especially just because we know that if a big round of tariffs went on, or we really started to hamper those imports from Mexico, there could be some real supply constraints down the road. Just, I think right now the trade is kind of leaning like we're still going to be really tight, and those imports are filling a lot of gaps in the cattle supply. So I think it would be denoted as pretty friendly the market here. It could cause, I mean, we've been seeing it on the chart already, so I wouldn't be surprised that we've already got a little bit of a lead on that kind of sentiment. But if that's actually going to happen because of this reason, maybe different. So I would say the shorts are probably going to be a little bit panicky here.
Sure. And we'll take a look deeper into this story and have more information. I'm sure you'll have a write-up about it here later this afternoon. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So once again, thanks to everybody that supports the show each and every day. We're doing this live every day that the markets are open, 8:15 Central Time, streaming live on X, Facebook Live, and YouTube Live. So hope everybody has a great start to the week. We look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.